Do you remember when your multifamily property unit price was $250,000 in 2022 at its peak? We had these REITs coming in, we had these private equity firms coming in, paying top dollar. And everyone jumped in. They thought it was a huge party. Now, bust the balloon, because we're down to $210,000 per door, and we've seen a small increase in the third and fourth quarter of 2024. And this increase, you can't be fooled by it. The reason this is happening is most people that were hit by Hurricane Helene and Hurricane Milton had to move out of their homes temporarily and rent into these units. So the small price increase that you're seeing of $8,000 per unit is temporary, guys. What's really going on is that these units are going to become vacant at the end of the year. And once these vacancies increase, you're going to see the devaluation on these properties. And the one thing that we haven't taken into account in the price drop from 250 to 210 is that interest rates have not reset on their loans for these properties. So we haven't seen a reset hit at this moment. And when we tie all these different variables together, you're going to understand why these multifamily units and why these multifamily properties are going to depreciate. Okay, guys? So here, let me give you a couple examples of what's going on. Home insurance. If you take insurance on these multifamily units, it used to cost between $600 to $800 per unit per year. So you do the math. 400 units, you do the math. You know what the number is. Now that price has nearly doubled. Insurance on these multifamily units are now $2,000 to $2,200 per unit. So imagine these homeowners, these investors, these real estate investment trusts, they're dealing with a huge price increases in insurance, which is taken away from their NOI. That's not the only thing going up. We got taxes going up because they paid top dollars for these properties. These properties were not worth the $250 to $260 to $270 per unit. Some of these investors paid up to $365,000 per unit. And what did that do to the tax bill? It blew it through the roof. So some of these tax bills have also doubled and nearly tripled. Taking these things into account, two simple little variables. We talked about insurance and we talked about taxes. I'm going to break down the numbers for you so you could understand exactly what type of an increase they dealt with. I have an investor that owns 477 units, and this is exactly what happened to him. He used to pay $800 per unit. So you take $800 and you multiply it by 477. His cost for insurance on that building, on that asset, on that multifamily was $381,000 a year. That same building today is costing him a lot more. Listen to this. He's paying $1,800 per unit. You take $1,800 and multiply by 477 units. His new insurance bill is $858,000. Do you know what that does to the NOI? This is terrible, guys. That's one variable. Now we're talking about a tax bill that was $400,000 a year that has nearly tripled to $1.2 million a year. And these are the types of things that are happening in multifamily, guys. And if you're asking me, what inning are we in? I'd say that ninth inning is the ending of the game. We're in the second inning, guys, of this disaster. It's just started. These costs are now appearing, and these operators are now having to deal with these new costs, and they're trying to figure out how to get out of this mess. Okay, so you have the operator that sees that this asset is no longer making sense. They're willing to walk away from the property because they're not making any money. They want to give the keys to the bank. Bank wants nothing to do with it because they know that that property is going to get destabilized instantly, so they don't want to take the keys from the owner. We're kind of at a standstill right now, okay, where the owner owns the property and is making no money and is willing to walk away from their down payment, and the bank doesn't want the keys because they know that they're going to get way under their note amount. So they're trying to figure out how to negotiate these things where they can keep the owners in and the bank can stay in and collect interest. But it's looking like it's going to get really tough because with tariffs that are hitting right now, along with all the different increases that I talked about earlier, I don't see how we're going to see prices go up in the next 12 to 16 months. Because we know that with these tariffs that are gonna hit our economy, it's going to make a huge difference, at least, at minimal, between 8 and 16 months. At minimal, things might correct, things might not correct, but in that window, in that 16-month window, right, there are gonna be a ton of people that are hurting, ton of investors that are hurting, that won't be able to save these properties. So these banks are gonna be forced to foreclose because they gotta keep their balance sheet at a certain number. Otherwise, they lose control of the bank, meaning they'll lose the bank. The FDIC will come in and swoop the bank away from these bank owners. They have to have a certain amount of money in their balance sheet. So at some point, these banks have to take these assets back and figure out how they can liquidate them at a minimal cost so they can keep their balance sheets right, okay guys? And this is what's going on. So don't be fooled by these small bumps because there's really no increase going on. At the moment, it's very dangerous. We haven't seen the rate adjust yet. We are looking at this year $1.5 trillion worth of notes that are gonna adjust in commercial, and most of these notes are going to be in multifamily. And I'm already seeing stressed out 3 and 4 star buildings going into foreclosure. The Florida market was great, guys, in multifamily and single family and any asset class that you looked at it, it was great. But something drastic and something different happened. And I'm gonna explain to you what happened. We had a disaster. We had 2 huge hurricanes come in. These waters surged in and damaged a ton of properties. And this has never happened in the history of Florida. This has never happened. The oceans are warm, our waters are warm. They're 9 degrees warmer than what they should be. And these warms are creating these surges, guys. So what's going on right now is that these longtime Florida multifamily owners and just owners of hotels are no longer interested in owning these asset classes near the water because they're seeing something completely different that they've seen in the last 60 years. These surges have never occurred. So what's going on right now in Florida is that these insurance companies do not want to insure some of these buildings. So it becomes difficult for you to sell these assets if you can't be insured. Because if you buy a property, the bank is going to give you a note, but they want to guarantee that note with insurance, right? And if you can't provide insurance on the property, then they're not interested in lending you the money to purchase. So there's a ton of things that are going to happen and are going to come out in the next 12 to 24 months in Florida, and you're gonna be able to see that Florida, it's terrible. It's getting hit from every single angle. Now, don't get me wrong. I love the blue skies. I'm not leaving anywhere. I just want to benefit from these huge drops because I am gonna run in when I see these drops. But I just want to tell you, just hold off right now because we got insurance through the roof, right? And it's gonna double and triple. We got high interest rates that are coming that are also gonna drop the values. We got high taxes in the works that will also drop the values. One of the things that are going on that I forgot to mention is that these multifamily real estate investment trusts have ordered their management companies and their rental offices to work with the tenants because they're dealing with high vacancies and they're also dealing with tenants that cannot pay the rent on time. So instead of paying the evict the tenant, they've decided to give the tenant 30 days to figure out how to pay the rent. So basically what they're doing is they're allowing for tenants to make 2 payments in a month. And real estate investment trusts and private equity firms, they're not doing this because they're nice. The reason they're doing this is because they realize that what good is it gonna do them to evict the tenant when they can get something for that unit versus sitting on a vacant unit with a potential tenant that we can work on catching up on your rent, or asking that tenant to leave, and now your building is sitting at a 35% vacancy when it could have been sitting at a 30% vacancy, guys. If you have a multifamily and you're interested in selling your multifamily, send me a message. I'll run a free evaluation on your property. If you're interested in selling after I run that free analysis, I will visit your property, tell you the things that you need to do curve appeal wise so we could increase the value of your property and sell it in the last year of fools that are buying, because I call this the last year of fools buying.